Good morning, students of class 10th. In the previous video we have started your chapter money and credit. Okay, and in that chapter we have discussed about the concept of money, and we have discussed also about a system which was prevailing in India, that is the barter system. Now we are going to discuss about the concept of banks. So let us first of all discuss that what is the meaning of the term bank, and after discussing that we are going to discuss about the concept deposits with bank, because on page number 40 in your books it is given the deposits with banks, right? So let us start the video. Let us first of all understand that what is a bank. A bank is an institution. A bank is an institution which provides and grants. So we were discussing that what is a bank. So bank is a institution. A bank is referred to an institution which performs two functions. The one is accepting deposits from general public. So the first function of a bank is that it will accept the deposits from the general public. Okay, so that is the first function of the bank, and the second function of the bank will be that the bank will be granting loans to the general public. What it will be doing? It will be granting loans to the general public. Okay, so students, these are the functions of a bank. The first one is it accepts deposits with the general public, and it grants loan to the general public. Okay, so this is said that deposits with the bank, and on page number 40 we are going to discuss the first function, that is accepting deposits with the general from the general public. So let us discuss that. The other form in which people hold money is as deposits with bank. At point of time people need some currency for their day-to-day needs. For instance, workers who receive their salary at the end of each month have extra cash at the beginning of the month. What do people do with the extra cash? They deposit it with the bank by opening a bank account in their name. Banks accept the deposits and also pay an amount of interest on the deposits. In this way, people money is safe with the banks and it earns an amount of interest. A fair interest is given to them, around 4%. People also have the provision of withdrawal of money as and when they require. Since the deposit with the bank accounts can be withdrawn on demand, these deposits are called as demand deposits. Okay, so they are we are discussing about the demand deposits here. Okay, the demand deposits. So what are demand deposits? Demand deposits are those deposits which can be withdrawn by the bank, by the person or by the account holder on demand. Okay, the money of which bank account can be withdrawn by the person on demand, that is referred to your demand deposit. And when a person is not able to withdraw money on demand but he is able to withdraw money after a particular period of time, that is known as term deposit. I don't think that term deposits is given in your syllabus, but so let us discuss only demand deposits. When a person deposits money with the bank and he is able to withdraw that money after as and when he requires, that means on his personal demand, then that is known as demand deposits. Okay, people also have the provision of withdraw some money as and when they require. Since the deposits in the bank accounts can be withdrawn on demand, These deposits are called as demand deposits. Demand deposits offer another interesting facility. It is a facility which lends it the essential characteristic of money that of a medium of exchange. Would you have heard the payment being made by check instead of cash? For the payments through check, the payer who has an account with the bank makes out a check for a specific amount. A check is a paper instructing the bank to pay a specific amount from the person's account to the person in whose name the check has been issued. Okay, so as a medium of exchange, money is also medium of exchange. So when a person is having a demand deposit account in the bank, then a bank will provide him with a checkbook, right? The bank will provide him with a check. So this is, I am drawing a specimen of the check on the board. So this is your specimen of a check. Now let us discuss about the check. See, the check will have basically three columns. The first column will be of the date on which the date of the check will be written. On the next line there will be pay, means on this column, in this column, the name of the person will be written to whom the check is to be paid. Okay, right? And if the person whose account is there in the bank, he is withdrawing it by himself, then he will write self there. Then he will write rupees, and after that he will write the amount in words, right? Like suppose a person wants to withdraw 5,000 rupees, then he will write here 5,000, and he wants to make payment to Mr. Sham, let us say. So he will write the name of Sham here. And here is another column, another box, in which the amount will be written in numbers, right? So here it is rupees, and 5,000 will be written here, and then there will be the column for signature, where the sign will be made of the person or the account holder, right? So this is the specimen of the check. Now there are different numbers, or you can say codes, which are written on the check that you should also know. The one is the account number, right? That will tell about the name of the account number of the person, right? And as you can see in your books, there is check number also, and there is coding used by the banks. IFSC नहीं है, चलिए ठीक है आगे. Thus we see that demand deposits share the essential features of the money. The facility of check against demand deposit make it possible to directly settle payments without the use of cash. That now the person can do the payment without the use of check, without the use of money, he can use the check, right? Since demand deposits are accepted widely as a means of payment along with the currency, they constitute money in the modern economy. So demand deposit also constitute money in the modern economy because of this reason only. You must remember the role that bank plays, but for the banks, there would be no demand deposits and no payments by check against these deposits. These modern form of money, currency and deposits are closely linked to the working of the modern banking system. Right. So how does the bank give you interest? Right. Suppose a bank has your deposit, and the bank will pay you interest. Suppose I have 1 lakh rupees deposited in the bank, then on quarterly basis the bank will pay me money, and let us suppose the rate of interest is 4%, then in that case the bank will pay approximately, on simple interest I am calculating, because the bank will calculate on compound interest, but I am calculating on simple interest, that around 4,000 rupees will be given to me by the bank during the year. And in case of compounding interest, there will be more amount. Okay, but how the bank provides interest and then also the facility of check, right? Bank also provides the facility of check, and bank also provides salary to its employees, and there are many different charges paid by the bank, right? Like maintenance of ATM and all the other services. So how does a bank earn? A bank earn by the way of granting loans, right? A bank earns by the way of granting loans. Let us consider it with an example. See, This is a bank. Let us say this is a bank, and a person deposited 5 lakh rupees within the bank as demand deposits. And as the person has deposited the amount, he can withdraw it anytime. But bank also know that that person is not going to come straight away by asking the money of demand deposit, and there are different persons who have deposited the money. There is like 5 lakh of Mr. X, there will be other amount of Mr. Y, and that will be the case. Now, what will bank do? Bank will provide this amount. The bank will give this amount to other person as loan, to the person who are in requirement of money as a loan. And suppose the bank is given 4% of interest to the depositors. This is the amount which is paid by the bank to the people. But in case the bank is giving loan to a person, then that person will have to pay the amount of interest to this person. And like I said, the general rate of interest for bank is 4%. Then the person will be giving a amount of 15% as loan. Okay, so what will be the difference? The difference will be of 9%, and this 9% is the earning of the bank. This is the earning of the bank. So it is given in your books. And yes, while watching the video, it is very important for you people that you sit with your books open. Okay, so let us start. Loan activity of the bank. It is given on page number 42. Let us take the story of banks further. What do the banks do with our deposits which they accept from the public? There is an interesting mechanism at work here. Banks keep only a small proportion of their demand deposits as cash with themselves, right? So what I said, the bank will be keeping not be keeping 5 lakh with itself for the whole time. The bank will keep only a small proportion of that amount with himself, and it will grant the loan of the remaining amount to any other person. For example, the Bank of India these days hold about 15%. Banks in India these days hold about 15% of their deposits as cash. This is kept as provision to pay the depositors who might come to withdraw the money from the bank, for the person who will be coming to withdraw the money from the bank. Since on any particular day only some of its money depositors come to withdraw cash, the bank is able to manage with this cash. Bank uses the major proportion of the deposit to extend loans. There is a huge demand for loans for various economic activities. And what will bank do? Bank will provide that money as loan to any other person. The bank will provide the money as loan to any other person. We shall read more about this in the following section. Banks make use of the deposits to meet the loan requirement of the people. In this way, banks mediate between those. So in this way, banks mediate between those who have surplus funds to the depositors and those who are in need of funds, the borrowers, right? So the bank works as a mediator, means a person, a middleman, who will be taking the money from the person who have a lot of money and will be providing it to the people who are in need of money, right? And in that case, and in that process, he will earn its own income and will be providing interest to the other people, and will also be helping those who are in need of money. Okay, bank charges a higher rate of interest on loan than what they offer to the deposits. The difference between what is charged uh, the difference between what is charged from borrowers and what is paid to depositors is the main source of income, right? Like what I said. Now two different credit situations are given to you, and we will read about this credit situation in the next chapter, means the money situation, that how people need money, right? So we will meet in the next video, and in that video we will be discussing about the two different credit situations from page number 43. Okay, so we will meet tomorrow, students, on Monday. So till then, stay at your homes and stay safe. Thank you.